What's up, you guys? It's Rob here. Today we're going to be covering ticker symbol GME. We'll cover it on the daily, weekly, and monthly time frame in anticipation for tomorrow's trading day, May 5th. I really hope May 5th is going to be better than what these past 2 days have been because the market has been absolutely brutal to us. Like today was awful. And if you guys can, do me a favor, hit that like button, hit that subscribe button, and make sure that you ring that bell too, because it's going to really help me out with the YouTube algorithm. And it will definitely help me out today because today was the red day within the market. And the huge thing I would just want to highlight really quickly is let's hop in the Webull and take a look at these charts. So in the upper left, I have the SPY. In the bottom left, I have the QQQ, which is the tech indices for NASDAQ. We have AMC and GME, AMC on the top, GME on the bottom. In the upper right, we have ARKK, and then we have the Dow Jones Index on the right. So the huge thing is all of these stocks had similar moves today. And this is the reason why I'm still going to harp that AMC and GME are not these meme stocks, and we can perform technical analysis on them because you can see they are more volatile than what an ETF is, but they do trade like tech and growth stocks. So keep that in mind. The SPY had a fall off, a bounce, and then another fall. We had a fall, bounce, and then another fall. We had a fall, bounce, and then another fall. We had a fall, bounce, and then another fall. Then we closed in, we ran into the close essentially on all of these. So keep that in mind. Like, I don't understand why people keep telling me that GameStop is something that you can't perform technical analysis on. I can tell you right now, you definitely can perform technical analysis on it, and I would much prefer to perform technical analysis on these stocks than just essentially bird boxing myself and walking into this blind, because I don't want to walk into a stock with my money blind. That is, in my personal opinion, that's stupid, and that's my personal opinion. Keep in mind, I'm not a financial advisor. I'm just some guy talking here on the internet, and this is not financial advice in any way, shape, or form. This is just purely my opinion. So, but let's go ahead and cover the charts here for GME for the day. The huge thing with GameStop for the day was we did have that initial sell-off. We did touch our intraday low here at 151.86. So we didn't touch that psychological support at 150, which is good. We had a nice bounce up. We regained 154 as a nice support. And then we did break back down through it later on. We did also test 158 here too. This is good. We do want to test and validate that our supports and resistances are there, because what this does is it just helps make them stronger the next time that we have to bounce off of them. And what this really tells me is the fact that we had 4.01 million shares traded the whole entire day for GameStop tells me that a lot of this was shorting, and then a lot of this green was people just buying up the stock because they saw the opportunity. They were like, GameStop below 160? Sure, I'll buy it. And a lot of people have bought it. Like, I do not see a reason why you wouldn't buy GameStop at 160. Just keep in mind, it's my personal opinion. None of this is financial advice, but we have been up at 325 before. We've been up at 500. And this company, even if we don't get the squeeze that we're all looking for, this company moving forward is turning themselves into an e-commerce company. And they also sell video games. So imagine if GameStop and esports came together. That would be literally huge for GameStop, and they would be definitely very unique in the video game world. It would definitely separate them from Steam, and it would definitely separate them from EA. That would be huge. So definitely a possibility. GameStop also doesn't have any debt anymore. They erased all of their long-term debt, and they have money to transform themselves into an e-commerce giant. So it's huge. Like, the potential with GameStop moving forward, not just the squeeze potential being huge, but the potential for them long term is also going to be huge for them too. But really, we closed at 160.73, which is good. I'm going to hop out here to the 1 month, 1 hour chart because I really just want to take a look at this view. And the huge thing I want to highlight here is if we zoom out, we're making these higher lows, which is a very good sign. And what we're doing is we're repeating similar trends that we're having. We're having a sell-off, and then we're having a nice rally. We have this consolidation, and then we have a sell-off. We have a sell-off, consolidation, a rally, and then you have a little bit of a sell-off here, followed by a day of consolidation, you have a rally. Now, the huge thing is, it seems like GameStop and AMC are following these, like, essentially these trends of like every 3 to like 4-ish weeks, we see them go up and then we see them go down kind of thing. And the huge thing is, we're making these higher lows, which is really good. And it shows that the stock, from a macroscopic point of view, is very bullish still, because we sometimes lose faith in the stock because on an intraday we see so many red, or we see 5 red days in a row. What we just need to do is we need to download Webull, use the referral link down below. You do get 2 free stocks valued anywhere between $8 and $1,600. One when your account's approved, and then the other when you deposit $100 on the platform. And you do get a lovely charting software like this, because looking at this chart and just reminding myself, the reason why that I hold GameStop is because of these lower highs. And it's not these lower highs, these higher lows. Gosh, I always get them inversed. These higher lows. And it's just because of that, the stock is still moving in a bullish direction. Yes, it is taking a long time, but keep in mind, the stock market isn't designed to be like this slot machine where you put $500 in it, pull a lever, hit triple sevens, then you get $1,500 out of it. It's not designed to be like that. Yes, a lot of people are definitely using it like a casino right now, but stock market has been designed to transfer wealth from the inpatient to the patient. It's a famous quote that's said by Warren Buffett, and it is a quote that I always look at with my investing, because I look for the long term with investing. Also, side note, Doge is sitting at 0.58. It's about to hit 60 cents, which is utterly insane. Sorry, that's just looking at it here. But the huge thing is, I think with GameStop over here, I think we're going to see either a day of consolidation or we'll see a move to the upside. And when we see a move to the upside, the huge thing that I want to see is us get above this point here at 198. So if we can make, that's a trend line, Webull. So if we could make, let's say if we could make like a high, the next higher high, if we could get to like, let's say like bold and audaciously 219. Let's say 211, between 219 and like 211, 210-ish kind of thing. If we can get anywhere between that and make this a higher high, that'll be good, because what this will do is it'll give us a double top versus essentially a double top here. And what we want to do is we want to be making those higher highs, because that will continue putting us in a bullish direction. Now, the huge thing is when we make this move, we want to try to do some consolidation at the top of it if we can, versus hitting it and then immediately pulling back. Because if we hit it and immediately get pulled back, that shows that a lot of people are essentially just selling at that point, and there's a lot of selling pressure there. We want to be able to say, okay, we hit this point and we stay stable there, because then the buying pressure and the selling pressure are equal. And when you have the buying pressure and the selling pressure is equal, essentially what you do is you just consolidate at a certain price point, because a lot of people are agreeing at that price point versus something below it. That's the reason why stocks fall, is because you have someone say, okay, well, I want to buy GameStop for, just an example here, $10. And then you have Sally over here that says, no, I'm going to sell it for $8. There's a meet in the middle kind of thing. So is Sally going to say, okay, all right, I'll sell it to you for $10, or am I going to go, I'm going to buy it to you for $8 kind of thing? So if we have people that are agreeing at the price on the upper end of it and not sliding downwards, that's going to help us consolidate on the top end of it and definitely help the stock remain very bullish. Now, when we have that pullback, the huge thing is we don't want to pull back all the way to this. We can pull all the way back to this trend line if we really want to, but ideally, if we could pull back a little bit lower, and let's say right here around 178, that would be honestly perfect, because then we find a good support line here, and then we can make our next essentially trend to the upside, and we can have a little bit. We had the sell-off, we do a little bit of consolidation, then we make our next trend up to the upwards. And it's definitely something I think that we're seeing here in GameStop, and it definitely looks like a pattern that I'm seeing. Let me know down in the comment section below, am I absolutely crazy or something like that? Because this is definitely a pattern that I'm seeing here. But overall, I want to cover the short interest on GameStop too. So the short interest on GameStop did decrease by 0.69%, which isn't a lot kind of thing. But if we do take a look at our shares on loan and our estimated short interest or free float, it did tick up actually yesterday. So we are seeing our shares on loan increase and our overall short interest or free float increase still. So keep that in mind. Our utilization is sitting higher than what it was yesterday at 59.93%. Our cost to borrow is 1.24 and our days to cover is 0.57. So our days to cover is still slightly peaking upwards. It's not nearly what it was back when we initially squeezed, was roughly around 2.54 days. Now we're sitting at a third of it. No, like an eighth of that kind of thing. We absolutely still can squeeze because the short interest or free float here is sitting at 23.28%. That is considered a heavily shorted stock. That isn't normal. Like, that is a heavily shorted stock. So keep that in mind. This absolutely can still squeeze, and anyone who says it cannot squeeze, it's just FUD. And the reason why that I said if we don't get a squeeze kind of thing, it isn't a possibility, but this still can absolutely squeeze. I don't have a reason why this can't squeeze unless if the shorts somehow cover all their positions and this price doesn't go through the roof. And if the price doesn't really go through the roof, then we really scratch my head and saying, did they actually cover their positions or did they put naked shorts in kind of thing? Because you can cover your short positions, have shorts there, and then have a naked short there, and we wouldn't know because it's a fake synthetic share. So overall, I still remain very bullish on GameStop. We still take a look at this chart here. As long as we continue respecting this trend line and we don't break through this trend line, I think we're perfectly fine. Like, the stock is doing perfectly fine. We're still moving in a bullish direction. And even if we zoom out here, let's actually zoom out to like the year to date. So if we take this trend line, we can even take this trend line all the way back here to like our post squeeze, and we're still respecting that trend line in an upwards direction. So we definitely are still moving and having an ascending level of support. Yes, it is very slow, but keep in mind, we just have to be patient, guys. Let's just be patient apes. We're eventually going to get our tendies and our bananas and go to the moon kind of thing. And I'll see you guys in the next one. Peace.